It's Wednesday at Brave New Coin in the US of A. Let's take a look at some DeFi charts. We'll start with the DeFi index. Perpetual future from FTX, not the end all be all of weather vanes for DeFi health. Didn't necessarily catch the extreme weakness in SNX, in Comp, in Bell. Didn't necessarily catch the strength in those three either. But it's a good gauge as far as what's going on. A lot of this is Uni, based on its constituent percentage, based on market cap. Uni, Link, Aave. So you're going to see a lot of shades of those things in this. Ultimately, what I wanted to see, the easiest trade is to see everything retraced to its January open. Some of these coins did. Some of them have bounced significantly from those levels now, but clearly not everything has. Obviously, Uni, Link, and Aave did not. Most of the bigger stuff did not retrace to their January lows. Uni is still up over 300% from its January open. Pretty incredible considering it was an airdrop. So we did have a low time frame W double bottom that is playing out as a mean reversion currently, and we're trying to snake our way back into the previous consolidation range. So if we can get back into the range, we probably hold this range until we establish strength or weakness again, but I don't expect us to just shoot up through the range necessarily, at least on aggregate. Lots of volume here for this specific pair on FTX. And we have put in a nice sizable volume support at 59. So between 59 and 10K, it's a decent range within a range if this gets rejected at 8.5. Ultimately though, trend is still bearish. That's important to remember. You can be bearish and think things are going to go up. That's okay. If anything, it sets reasonable expectations for targets to the upside. So I've been adding to the DeFi portfolio over the past week. I'll talk about that at the end on Enzyme because of the strength in DeFi over the past 2 weeks, really. Here's Bitcoin dominance, which turned down at the diagonal. I don't move these lines. They're just here. Market doesn't know they're there, but that's where it turned down. So this could suggest some low time frame alt strength relative to Bitcoin. And I think we're seeing that play out currently. Also seeing a lot of volume on all of these pairs on Binance, which I don't know if that represents people trying to leave Binance via crypto or actual buying volume because people are bullish again. Here's something from Bitcoin on Twitter. He took the DeFi perp times, I think that's 1 million, divided by total 2, which is alt market cap minus, it's all crypto market cap sans BTC. So it's everything except BTC. And what he's showing here is, yeah, we're starting to actually move up again in market cap. I'm not a big fan of market cap stuff. Even dominance, doesn't really make too much sense. All of these alts were created out of nowhere, thin air, right? So market cap's a little dubious as far as an indicator, but technically, this is the 3-day, it's a high time frame. It had put in an Adam and Eve in the past. This is an N of 1, but it did behave sort of as expected. So we're starting to see some shades of strength. And this may again put in an Adam and Eve down here like it did here. This is incredibly clean. Textbook. People are like, TA's dumb, TA's stupid. Well, if this stuff didn't appear over and over again, then nobody would pay attention to it. But here we are. So it may put in a similar fractal at this resistance level, but it is certainly more bullish based on market cap than it had been previously. So charts that don't look like SNX and don't look like Comp have the potential to look like SNX and to look like Comp. What I mean by that is they've all sold off and rubber banded to either the 200 or will continue to rubber band to the flat Kumo top, the cloud top here. In this case for SNX it was 15. My trepidation to enter back into SNX was based on platform instability, all the issues that caused this drop, that caused this puke based on single collateral positions for synthetics is still there. It will always be there unless they move away from single collateral. What that means is if you use SNX to make your synthetics and SNX itself gets pummeled in price, you have to continue to add collateral. And if you don't, you get margin called. And if you get margin called, price goes down and that affects everyone else's collateral, right? And it's just this cascade, this nonstop on-chain liquidation. So a lot of that is likely why SNX has these prolonged downsides. Even in November, it was putting in this really clean looking falling wedge, then just puked out the bottom, right? And that was the liquidation spike most likely, where you just catch people off guard. So SNX is that going for it in that prices stopped going down. Things can stabilize on the synthetic side of things. For the actual platform, it's mean reverted, it's rubber banded, and it's seeing a ton of volume on KuCoin, which I wouldn't trust anything you're seeing on this chart volume wise, but look at this volume, right? I mean, this isn't real, obviously. Clearly, it's at levels that it was at prior to the breakdown, but tons of volume on KuCoin, a fraction of that being real. This is Binance 12R for comp, and you're kind of seeing the same thing. You get this W at the bottom. It almost retraced to January open. It's moving through the cloud, bullish TK cross. It's even above the 200. It nearly hit the edge of the cloud, and this rubber banded significantly, more so than anything else, probably based on news regarding that 4% USDC lending rate. Their lending rates with comp rewards are getting more attractive than Aave as well. And there's always going to be this incentive game between Maker Comp, Aave, and whoever else, where TVL is going to slosh around a lot with Curve as well, depending on volatility. And that's probably going to affect price. And that's probably what happened here. So that still looks okay for more up. Here's Aave. Like Link, I'll show that link in a second, but Link dipped below the pitchfork for the first time in 2 years, and it's starting to get back inside. Aave dipped far below, but now it's on its journey for mean reversion back into the pitchfork. Reasonably, you could consider new all-time highs at around 900. That would be a full, like, multi-year mean reversion. Right now, we're just seeing a low time frame mean reversion back to 400, basically. Based on previous years' rate of change, you'd expect price action to lead us to somewhere around 900. And all of these charts are also setting up for this like head and shoulders, inverted head and shoulders situation. Shoulder, head, shoulder, that's like a month away. But we could get rejected at 400, dip back down to 300, 250, something like that. That's a ways off, but something to watch for. So this still looks like it wants more up. Here's Maker, hasn't yet completed or started that journey really back to 4K, which would be that edge to edge move. All these are on the 12R, by the way. You can see similar stuff on the daily. For alts, sometimes it's better to look at this on the 12R because they move quicker. And if you're on the daily, you're kind of late. On the daily, this is just going to look like TK disequilibrium, like all of these are showing. Band on the daily starting to bounce, starting to turn up as well. You get a bull div, W double bottom. We still have this death cross for the first time in a long while for Band. It reached its January open, and it's just kind of rubber banding back to that 200-day moving average. In the near term, around 10, most likely. In general, this is a slower mover than everything else, so it'll probably take longer to get there, but it still looks decent for a move to the upside. Here's the link again. You had your W double bottom, you had your bullish divergence. Reasonable expectation based on rate of change since 2019 would be a move back to around 50 should this low hold. If this gets lower lows with a death cross for the first time in 2 years, then for me it's just done skis. It's over. But if these lows can hold, if this can get back into the pitchfork, then I like that full mean reversion potential. If this, then that. Uni USD 12R, same thing. Bull div, Adam and Eve double bottom. Call it a descending triangle, call it a rising wedge. I don't care. It still looks fine for continuation. Somewhere around 30, 28 probably for Uni. Again, it's still up significantly since January, so you always got to be careful of that. And it is still bearish as long as it's below the 200-day moving average and below the daily cloud. This is the 12R, so you got to look at that a little differently. But we could still be rather bullish in the near term. Sushi's a great example because definitely in a bearish pitchfork, no doubt about it. Definitely bounced on the lows twice now. You had a bull div, you had a W double bottom, you're getting your edge to edge move. The edge to edge move lines up with the pitchfork midline break to the top side of the pitchfork. It also lines up with the VPVR levels from 750 to 14. This looks like easy risk reward slam dunk setup that I like. So I like additional upside here, definitely. For Sushi, volume, here's that volume I'm mentioning. You can see how it sort of went to nothing after the big spike in liquidations in May 18th on Binance and everywhere else. And now it's starting to pick up again. Gas is up considerably as well. Part of that is Shiba swap scam garbage. Part of that is people ready to do some speculating again. Here's Curve, which since January honestly hasn't done anything. It's just been in this range. Curve has some pretty insane incentives and rewards for yield, which could be kind of harming this price exploration, regardless of vesting or whatever else is going on in that complex world of yield farming for Curve. It almost looks like their emissions are just too high to let this go higher. So if it can make higher highs eventually, great, right? Which would be 320 to 4, somewhere in there. But I wouldn't expect too much of this in the near term, even with TVL being an all-time high for Curve, Convex, whatever. Call it whatever you want. Until it actually does something, you can't just expect it to burst through everything. But it does look decent for some upside in the near term. Here's BAL, which was an easier one to feel good about getting back into. It broke below the falling wedge, bull div, W to a bottom, January open, right? Volume support, like it kind of checked all those boxes as far as washing out everybody quickly since May, and is on its journey potentially to 45. Some of these coins, BAL, SNX, 1 inch, also have significant yields on Yearn, which is definitely playing a role, at least in my trading decisions on Enzyme. I can get up to 20% yield on this. You better believe I'm going to double down on those positions if it looks bullish. That's just extra winning on top of winning if you're correct. Even if you're wrong, it hurts less because you're making that yield. But if you're right in a big way. So I like BAL significantly higher. Even BNT looks good to 5.5. That mean reversion edge-to-edge play, just like everything else. And all this stuff's going to move together, which is why I'm optimistic, because SNX, Comp, and a few others that aren't in this video have done it. So it usually means the other stuff can do it as well. 1 inch, similar to Curve, basically flat. But if it's flat and I'm getting yield on it, on Enzyme, I don't care, right? As long as it's not puking some volume coming back here as well on Binance. Upside's probably limited to like 455, something like that. But it certainly looks a lot less bearish than it had even a few days ago. Trying to bottom, trying to base, volumes picking up. Looks decent there. ZRX didn't quite retrace the 35 cents. And it looks like it's well on its way for mean reversion, somewhere to $1.35. Just based on everything else, this isn't going to move alone. I don't think the coin, the token, is exciting enough for that number to move on its own. But look at this volume spike relative. This is the highest volume it's had since February. So somebody is buying a lot of this stuff in a big way. They're ready to love again here at 80 cents for ZRX. So that is an edge-to-edge trade, right? As much as I think the coin isn't really worth anything, that's where it's headed. Melon was never really super bearish. They had a bunch of news over the past couple months relating to listings and adding functionality to the platform. Enzyme volumes coming back here as well on Kraken, which you can trust over even Binance in the volume department. So even though it doesn't look super exciting price-wise, and it's kind of just ranging, this could be W double bottoming, could be ready for higher highs. One thing with Enzyme specifically is watch the TVLs. If TVL continues to increase, I suspect more and more people will start to get on board with the token itself, kind of under the radar thus far, but it is on Kraken. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio that I trade on Enzyme for Techemy Capital. You can deposit ETH or USDC or just watch what I'm doing. You can see all of the DeFi activity I've done over the past week. If you go to the trades tab, just tons of lending and swaps and just burning gas like I'm a Hummer on the highway. Luckily, gas is pretty low. If you're participating in this, you don't pay for the gas. We do. That's one draw to this. There are fees and a high water mark. So, unless this is above the last time we took fees, we don't take fees. We don't just continually take fees. There's a 2% fee per year flat, but we don't take fees unless we're making money. And this is the ETH-BTC fund. I've been adding ETH and BTC over the past couple days, sort of with the expectation that ETH and alts will assist in BTC's rise, which is looking increasingly likely over the next couple days. based on technicals. And again, you can see all the trades, deposits. I mean, I think it's really cool if you're curious, what is this guy doing? He says a lot of stuff on Twitter. Is he actually long? Is he in cash? What confidence does he have? And as far as the yield stuff, like I said, Enzyme added Yearn vaults a couple days ago, and you can see the APYs I'm getting on BAL and SNX relative to Aave, and that's probably playing a big part in why Yearn's TVL is increasing. And you can see all the other stuff I can get into. That's all for this one. Like, dislike, comment, share, subscribe. Happy trading.